Hello and welcome back. My name is Evan. It is Wednesday, May 20th, 2 p.m. Eastern Time, and I want to do a pulse check here on the market environment, the pullback we saw coming into the week, the bounce we're getting today, right before NVIDIA earnings, and some of the signals that are shifting in our market outlook from a swing trader perspective. So let's get into it. It's going to be a short, tight, actionable video here. NVIDIA reports earnings in a couple of hours. The trend here from the technicals, they look beautiful. I mean, we just recently are emerging from a multi-month range for NVIDIA where some of the earnings, growth has been catching up to perhaps the stock price. And I don't have any other outlook to say on the actual earnings numbers. I'm sure they will be fantastic. It is the story that Jensen will be able to tell on the future growth demand and resiliency of this AI build out. NVIDIA, though, is obviously going to set the tone here for the rest of the market. When we had our Friday video on Friday last week, we talked about a number of risks that were growing here in the market that would sort of get us into a pullback mindset coming into this week. Rates were one of them. This was the 10-year Treasury yield chart we showed on a weekly basis as it was flirting with this big trend line. And fortunately for the market, at least today, we are getting a big inverted sort of hammer forming on this weekly session. Now it's Wednesday, there's 2 trading days left. This is a chart crime to look at weekly candles before they close. But the point is we saw the market try and follow through this week. We sort of failed fast and rejected today. This is what's helping the market now bounce like we're seeing out there. We also have crude oil, which is sharply kind of coming down as well. So these macro pressures, which is the theme we talked about in Friday's video, is starting to alleviate just a little bit. And that's already what you're seeing, what allows the equities to sort of bounce. Semiconductors had nearly a 10% pullback, if you could believe it or not, from the highs to the lows in just about 3 or 4 days, 9% pullback to be exact. They are bouncing here. If we look at the Qs, they had about a 3.5% pullback. These are the largest pullbacks that we've seen since April. So since the trend V-shaped sort of accelerated back to the upside, these are now sort of the recent declines are some of the biggest pullbacks we've seen. And so naturally, there's just going to be dip buyers sort of waiting for everyone who has been left out in this market rally. So these are all the positive things that have been happening this week in terms of the macro pressures getting sort of taken off a little bit. Let me show you a little bit of our work here, though, and what we are doing on our swing trading environment. Before that, Russell 2000, this was a chart I posted yesterday. And again, you can see 6 days down, not 6 days, 3 days down, 6% from highs, retesting the January highs. And just to show this chart here on what the Russell's doing today, it's a springboard up. So again, another kind of bullish check mark in the short term that we sort of reset and kind of rattled the tree to come back down, retest the pivot, retest the prior highs. And now we found, kind of an explosive bounce off here. Those are all the net positives. Now, let me show you a little bit of the negatives, perhaps, or at least maybe glass half full. So our environment outlook got downgraded here on our swing trading model. So our Quant Rockets model, which is trading stocks for the next, call it 2 to 3 weeks, has downgraded to a mixed swing trading environment. This does not mean we sell everything. It's not mean we're bearish. It doesn't mean we're, running for the hills. It just simply means that we want to trade a bit more selectively while we're in this sort of chop zone. We want to stick with leadership industries. We want to take our profit targets. That's generally the outlook here for how we would approach this. If we look at our model here, you can see this is our market environment, fully rules-based. There's no discretion. There's no waking up and feeling a certain way. This is codified rules. And you can see, again, from April 9th is when we flipped outright bullish on this market. And so it was about a 23-day run until yesterday or until Monday, until we finally got the downgrade into our neutral sort of mixed state. So once again, that's the way we're reading it. It basically says, hey, maybe we want to have 10% cash, 20% cash, keep a little cash buffer, stay invested in the market, take profits, trade more selectively. That is the mandate now that we are under here until the next few days. Maybe if NVIDIA blows out, market starts screaming higher again, we'll get a nice back upgrade here to the market. We get fully invested again. That's the way we're trying to responsibly always have some skin in the game, not fight the market, and be responsible and tactical, adapting to the market. So that is a notable change one day in the mixed environment state. And now I want to show you just a couple of trade ideas. So semis, I just want to show this as an update. We are still long semis, SOXL. We bought this at $66.13. We've taken all of our profit targets. Our current exit zone is 133, which is approximately the week to date lows. So we're still long semis, up 155% in this trade, but again, that's how we're managing it. Speaking of semis, AXTI. So if you're looking for kind of pullback opportunities here, here's one that's interesting. It's on the list. We own it. We took one profit target. It's pulling back, and you can see it's trying to form some type of flag here. It's definitely heavy today. So this is something you can monitor. Again, be selective. Wait for the exact trigger that you want. We are involved in it, but I just want to present it there as a pullback opportunity. CIFR, I've talked about this a couple of times, CIFR. We own it. We like it. Multi-month consolidation. It's starting to make higher highs and higher lows. Our exit zone is tight. So again, if you're looking for a pullback opportunity in a stock that's not extended or too heated, then this is an interesting one. ASTS, a retail favorite here. We own it. We like it. Exit zones around 72.80. Last but not least, software. So a few weeks ago, I did a video on software, and most of those names, Duolingo, and what else was on there? Rubric and a couple others. They launched and they hit multiple profit targets. APP, this is one that we got involved in around that similar time, has not done a whole lot. Still, it's a valid setup for us. We're down on the trade. That's the way we're structuring it. These are just some trade ideas for you to think about. These are all coming from our Rockets swing trading model. And I want to leave you with some thoughts on crypto. Again, this is sort of the bane of my tactical trading existence this year, but Bitcoin, we talked about it last week. On Friday, we said that tactically it looked weak. It looked like it was setting up for lower prices. It came into the week with lower prices. So that is all as planned. What I importantly am looking for is some type of higher low to get put on against 75K. I wanted to see a higher low form versus 75K. Feels like it's doing it, right? It feels like it is trying to put in a low here above that 75K zone. Bitcoin and crypto are both slept on. Nobody cares about them. There's no exuberance. It's ripe for rotation in a otherwise very strong market. So I still think this is kind of like this ace in the hole potential rotation explosive setup. Not many eyes on it, so I would not sleep on it. But again, we got to see it prove itself. It's been frustrating in this range. And so let's see how this shakes out into the end of the week and get those weekly closes. So that's it. A little midweek update. Hope you're doing well out there. Big NVIDIA earnings, trade them well. Again, our market environment did get downgraded. Does not mean we are selling everything. It just means we're being a bit more selective. So take care. Thanks for watching. We'll see you back here in the next video update.